Hi, good morning to all. This is ATIC's broadcast number 8 regarding GST on sale of used vehicle part 2. So we have already seen in previous broadcast as per notification number 8 bar 2018 central tax rate. So as per this notification, if the ITC not availed for the vehicle, the value of supply shall be the difference between the depreciated value and the sale value. Okay. If the value is negative, we need not to pay any tax on the sale of second-hand vehicle. So this is what we have seen in the previous broadcast. And if the ITC not aware, the Cess is not also applicable as per notification number 1 bar 2017 compensation Cess rate. What in the case of if ITC availed for that vehicle? For example, we are selling a each vehicle, a load vehicle after the 3 years of purchase. So in that case, whether tax is applicable on a wholesale value or margin of supply is applicable. So the margin of supply for a used vehicle is only applicable if the ITC is not availed. If ITC is already availed, we have to collect and pay the tax for the whole sale value, the actual consideration. So as per chapter 87, the following are the applicable tax rate for the vehicles. If it is electrically operated vehicles, the rate of tax is 5%. If it is a fuel cell motor vehicle, the tax rate is 12%. If it is a tractor, except road tractors for semi-trailer, it is 12%. If it is a road tractors for semi-trailers, then the rate of tax will be 28%. The HSN will be 8701. If it is a motor vehicle for transportation of 10 or more passengers, including the driver, the rate of tax will be 28%. The HSN is 8702. If the motor vehicle a length not exceeding 400 mm, and if it is a petrol and CNG LPG driven vehicles and CC does not exceed 1200 cc, then the rate of tax is 18%. If the same is a diesel driven vehicle and the CC does not exceed 1500, the rate of tax will be 18%. The HSN is 8703. And then motor vehicle for transportation of goods is 28%. The HSN is 8704. If it is a motorcycle, whether with or without the sidecars, the tax rate will be 28% and the HSN will be 8711. For a bicycle, the rate of tax will be 12%. That cycles should be not motorized. Okay. And then, so this is the applicable tax rate for a sale of used vehicle in case of ITC availed, where ITC availed. Okay, this is the rate of tax, but whether Cess applicable for the said vehicle? Yes, the Cess also applicable based on the nature of vehicle. Okay, these are the major list of a Cess applicable for a sale of vehicles. So this rate is also applicable for sale of used vehicles where you have claimed ITC. So if a motor vehicles for the transport of not more than 13%, then the rate of tax will be, Cess rate will be nil. If it is a three-wheeled vehicles, then no Cess. If it is a petrol, CNG or LPG driven vehicle and CC does not exceed 1200 and the length does not exceed 400 mm, then rate of tax for compensation Cess is 1%. And if it is a diesel driven motor vehicle with the engine capacity not exceeding 1500 cc and the length not exceeding 400 mm, the Cess rate will be 3%. And if a motor vehicle of engine capacity not exceeding 1500, then the Cess rate will be 17%. If a motor vehicle with engine capacity exceeding 1500 cc, other than motor vehicle specified in serial number 52B. it is a 20%. If it is a serial number 52B, what is serial number 52B? 52 serial number 52B covers motor vehicle known as a utility vehicles. So we called as a SUV, XUV, MPV, and MUV. These are the utility vehicles with an engine capacity of 1500 cc and length 400 mm and ground clearance of 170 mm and above. So these vehicles are taxable at Cess 22%. So the sale of used vehicle also cover Cess based on the description of the vehicle. So usually whenever you sell a used vehicle where you have claimed ITC, you may check the purchase invoice of the vehicle. So the same tax rate and Cess applicable in most of the cases. Anyhow, you have to check the current tax rate applicable for the said vehicle. If you have purchased 3 years back or 5 years back, so in that time the Cess rate will be a lower one or a higher one. Thereafter, it may be reduced or increased. So always you have to check the current tax rate applicable and Cess rate applicable for the sale of used vehicle. So these are the main things to be considered. Okay. And the another one point we have to discuss about is ITC reversal if it is sold before 5 years. So we have already seen in a broadcast related to Rule 42 and 43, the capital goods. So vehicle is the capital goods. The capital goods useful life is 5 years. That means 60 months. If it is sold before that, the proportionate ITC has to be reversed. How to calculate the ITC to be reversed? That is we are going to discuss in next slide, and we have prepared a Excel template for the exclusive benefit of the ATIC. So it is a scenario, a vehicle sold within 5 years of purchase. So this is applicable not only vehicle, this calculation is applicable for all capital goods which is sold before the 5 years of period. So ITC availed on purchase. For example, so in this scenario, a date of purchase is 19 October 2023. So in that period, the ITC availed is 86,400. So as we have already discussed in Rule 43, the useful life of a capital good is 5 years. If it is sold before that, the proportionate ITC has to be reversed. That means, for example, the useful life is a 16 months. If it is sold after 4 years, let's say 48 months. So the eligible ITC for you is only for the proportionate of 48 months. The balance 12-month ITC has to be reversed. It is a basic concept. Okay. But to reverse the to calculate the ITC reversal for the capital good, there are two rules. Rule 40 sub rule 2 and rule 44 sub rule 1 class B. So these two rules have a same method of calculation, except rule 40 to calculate based on a quarterly. Every quarter you are eligible for a 5% of ITC. The calculation as per rule 44 1B is based on monthly. So as per rule 44 1B, the proportionate ITC eligible is for 48 months and the balance 12 months has to be reversed. It is a first step we have to understand. As per rule 40 sub rule 2, and the 48 months has divided into quarters. So every year there is a 4 quarters. The 48 months, that means 4 years. 4 years as a 4 into 4, 16 quarters. Okay. So the ITC eligible will be 16 quarters into 5, 16 into 5% equal to 80%. So he is eligible for a 80% ITC as per rule 40 sub rule 2. So based on these two rules, we will get a ITC eligible and ITC ineligible as per the given formula. We will work in an Excel template for a better understanding. The difference between ITC ineligible and tax collected on a sale of used vehicle. shall be the ITC amount to be reversed. Okay, so now we are opening a Excel. So this is the Excel template for the ITC reversal calculation in case of sale of capital goods, not only vehicle. This Excel template will be used for sale of all capital goods within 5 years of usage. So there is a two rule as we have already discussed, rule 40 sub rule 2, rule 44 1b. So rule 40 sub rule 2 is calculated on quarterly manner. Rule 44 1b is calculated on a monthly basis. Okay. So for the better understanding, we will um, change the amount to the round off figure. So the ITC availed at the time of purchase is 2 lakh. The date of purchase is 19 October 2023 and the date of sale is 26 2. So we may put the current date 1 2 2025. So in this case, if we calculate as a quarterly basis, the capital goods used for the 6 quarters are 16 months. So there is a two calculation. The first we calculate for the 6 quarters. The total quarters available for the useful life is 20 quarters. The 6 quarters only the capital goods used. Hence, the ITC eligible will be 60,000. The formula is ITC availed on purchase divided by 20 because the useful life is 20 quarters into the used quarters. Okay. So the 60,000 is the eligible ITC. The ineligible ITC will be ITC availed minus eligible ITC. That will be the ineligible ITC as per rule 40 sub rule 2. So in this case, rule 44 sub rule 1b, the 16 months is the used period. So in this case, the eligible ITC will be the ITC availed on purchase divided by 60 months into used months. That is a 16 months. Okay. So as per this calculation, the 53,333 is a eligible ITC. The ineligible ITC will be ITC availed minus eligible ITC. That means 1,46,667 is the ineligible ITC. Now at the time of sale, we are collecting tax now. So we have to enter the tax on sales. If we are collecting 54,000, assuming that you are collecting 1 lakh. So I am collecting 1 lakh tax on sale of the used goods. So in this case, ITC reversed will be 40,000 as per rule 40 sub rule 2, 46,000 as per rule 44 1b. And I have read it in somewhere where there are two contradictory provisions is there. The which one is benefit to the assessee is applicable. But for a safer side, it is advisable to reverse the whichever is higher amount. Okay. So if the value is negative, we need not to reverse. Okay, thank you all. We will discuss another interesting topic tomorrow.